April 27, 2021. What's going on, everybody? Today was a big day on Wall Street. Indices sold off fractionally, but even more importantly, Microsoft, Google, some of the biggest players in the tech space reported earnings, and in my opinion, absolutely blew it out of the water. So now, let's quickly review Microsoft earnings. We're going to review Google's earnings, and then we're going to talk about the market overall and finish off with a recap on Ethereum, which is a cryptocurrency I'm very bullish on, and I will continue to tell, well, not really, I can't tell you guys what to do, but in my opinion, any sort of pullback in cryptocurrencies, more specifically Ethereum, should be bought. So Microsoft beat guidance on both top and bottom line. They came in at $41.7 billion in revenue. And Microsoft reported the strongest revenue growth in, I believe, 2 years. Or since 2018, longer than that. So it was an absolutely phenomenal quarter. EPS came in above analyst expectations at $1.95, up 35%. And in my other video, I was sort of talking about these are the kind of stocks you want to own in your portfolio and you don't want to touch, right? If you can have a company that's growing their revenues 19%, that's doing $41.7 billion a quarter, and they're still growing at 19%, that's almost like impossible, right? That's the cream of the crop. That's like the most fundamentally sound businesses that their customers love their products and services. They have the best management teams. You want to own these names, right? If a company that's doing about $41.7 billion a quarter in revenue and they're still growing at 19%, they're doing something right. So let's move over here to Microsoft. So Microsoft books its biggest revenue growth since 2018. Now, there's a couple things that I want to go over here because even though the revenue growth was good, they hit on both top and bottom line. Mainly, the thing that I want to look at is the Azure cloud revenue growth. So Azure is a cloud service similar to AWS, or Amazon Web Services, and they're a competitor, right? So something interesting about this is, if we dig a little bit deeper here, it says that the company said its Azure public cloud, which competes with market leader Amazon Web Services, grew 50%, faster than the 46% growth analysts had expected, according to CNBC's review of 14 equity research notes. In the prior quarter, Azure grew its revenue 50%. Microsoft does not disclose Azure revenue in dollars. With respect to guidance, Microsoft is expecting $43.6 billion to $44.5 billion in revenue in the fiscal fourth quarter. So something interesting about this is, I believe going forward, Azure is going to make up a significant portion or the majority of Microsoft's revenue. So that is the one piece of information in any earnings report that Microsoft puts out, is that I like to see that's consistently growing. Right? So I will maintain my long position and not even touch it ever in Microsoft, so long as their revenues are growing in their Azure segment. So if we look at MarketSmith here, just on a basic technical analysis standpoint, it looks like Microsoft is trying to break out of this flat base, and your projection for your profit-taking point is about $300. So I wouldn't be surprised if Microsoft, on this earnings report, even though it's down a little bit after hours, I'm more than confident that even if we have a normal pullback correction to the 50-day moving average, that institutions will step in here and be a buyer of Microsoft on any dip, and we can go ahead and trend higher throughout the summer. I think it's fantastic that Microsoft has been such a staple in my portfolio, and just look at the volatility in this one. Even during the coronavirus pandemic, I think this was one of the names that didn't really sell off that much, right? So it was only down about 28 to 30% when other names were getting decimated. Other names were down 60 to 70% when names like Microsoft and Amazon were only down 20 or 30, right? Even though that's a harsh sell-off, those names were selling off less than the others. That's signaling strength. That's signaling that institutions want to hold on to these names and they don't want to lose their core positions. So moving on to Alphabet, another blowout report, and I've been covering on this channel for a long time that I'm bullish on big tech. I'm going to continue to stay long big tech. I know it's an overcrowded trade. Everybody's trying to call a top on the stock market, but you have to look at the fundamentals. The Federal Reserve is going to continue to pump and pump trillions of dollars into this market, and it's not like you have companies that are missing their earnings targets. You have companies that are absolutely blowing out their earnings. So for example, Alphabet, ticker symbol GOOGL. Alphabet reports big earnings beat as revenue grows 34%. Alphabet reported big beats on earnings and revenue for Q1. The stock rose more than 4% in after-hours trading. YouTube ad revenue grew nearly 50% year over year, which is nuts. And that's probably because everybody was inside for the coronavirus pandemic, watching YouTube, either on their smartphones or on their TVs or whatever. But any sort of business that has a recurring revenue model, and especially any business that sells advertising, that's something you want to get long. So if you're looking to create a portfolio and you want to invest in individual stocks, look at what the best mutual fund managers are doing. They make names like Microsoft, Google, Apple, the big staples of their portfolio to sort of balance everything out and reduce volatility, and then they can nickel and dime and add in some more risky names. So Alphabet reported huge beats on its top and bottom lines for the first quarter of 2021, as well as a new $50 billion stock buyback. This is something we cover a ton on the channel, and this was in my previous video, is I love to look for stocks that are launching massive repurchase programs. Why? Because that takes liquidity, or that takes shares off of the open market and actually increases the earnings per share, or EPS. You want to see a management team that is so confident in their stock and in their business that they're willing to buy stock at current market price because they're expecting they can make a return on it in the future. So this is another reason why you want to be long big tech. Look for companies that are launching massive stock repurchase programs and get long those companies that have solid fundamental earnings and sales. So earnings, so $26.29 per share versus the $15.82 per share expected, an absolute blowout on earnings. Revenue, $55.31 billion versus $51.70 billion expected, another blowout. Google Cloud. This is something very, very important to pay attention to. Google Cloud competes with Azure from Microsoft and AWS from Amazon. Cloud revenue came in at about $4.05 billion versus the $4.07 billion expected. YouTube ad revenue, $6.01 billion versus $5.70 billion. That's a complete blowout. Traffic acquisition costs, or TAC, $9.71 billion versus $9.25 billion. And overall, Google's revenue rose 34% from the same period a year prior. The company reported advertising revenue of $44.68 billion for the quarter. That's a significant rise from $33.76 billion in the same quarter last year, making it the fastest annualized growth rate in at least 4 years. Although the results were boosted by an easy comparable with last year's quarter, as the onset of the coronavirus pandemic caused a steep drop in advertising spend. But overall, guys, I am super, super bullish on both Google and Microsoft. Let's just check Google here on MarketSmith. Just look at these fundamentals, right? And then if you zoom out on a weekly chart, no wonder why this stock has gone one way but higher. You look at the return on equity, 17% return on equity. Cash flow, $74.09 of cash flow. Increasing institutional sponsorship, so the number of mutual funds and big institutional investors that are buying the name has increased from 5,310 to 5,621, and revenue has just been unbelievable, on a tear. Just to give you an example, in the June 2019 quarter, Google was doing $38 billion. Now they're doing $55 billion in revenue a quarter. It's unbelievable. For the annualized estimates for 2021, they expect to earn about $70 per share. And in 2022, they look to earn about $82 per share. So they're growing their EPS at almost 20% clip. So I'm bullish Google. I think it's very important that, I can't give out financial advice, but I'm just going to say this. I'm bullish big tech. I'm going to continue to be bullish big tech. And we have also Apple reporting earnings tomorrow. Boeing, Shopify, all reporting Wednesday. Facebook. So this is like a jam-packed week for earnings, guys. So we should definitely, keep our head on a swivel here. Oh, and Starbucks also reported earnings. Let's check out Starbucks. Ticker symbol SBUX. I think they actually returned to their full revenue since the coronavirus pandemic. So Starbucks shares fall despite higher forecasts. That's all stupid, irrelevant. So Starbucks Q2 results show full sales recovery. That's unbelievable. That's a resilient company. Okay, if you can have the entire world come to a grinding halt and have 50% of your stores out of commission closed down, and now a year later, you show full sales recovery in the United States, that's unreal. That's a phenomenal business. Like, think about that. The world ended and half of Starbucks stores were out of commission. And now, 1 year later, the company is back to full revenue, full rocking and rolling. Like, that's unreal. 145% revenue growth after a tanked in 2020 due to the coronavirus, and now we're right back on track with a steady 22% annualized revenue growth. Phenomenal business. I'm bullish Starbucks as well. Let's not make this video too long, guys. What I do want to mention here, we have Atlassian reporting earnings on Thursday. Here's something I like, and here's something I like to look for when adding to existing positions. This is why I always have a 50-day moving average and a 200-day moving average up on my chart at all times. Now, I'm not big into technical analysis. However, big institutions and mutual fund managers tend to add to their core positions on a retrace to the 200-day moving average. So if you can scan hundreds of stocks and you can see which stocks are correcting to the 200-day moving average, what you want to see is once these stocks correct to the 200-day, you want to see if there's concurrent volume pouring in and the price quickly reverses to the upside. So for example, on Atlassian, look at all of this buy-side volume coming in here, right when the stock corrects to the 200-day moving average. And if you notice, the correction was on lower than average volume, right? So that means even though the stock is correcting, not a lot of people are actually giving up their positions. Not a lot of people are selling. However, when it corrects to that 200-day moving average, you see a ton of institutional sponsorship with above average volume that we haven't seen in over a year pouring into this name and showing a nice bounce off of that 200-day. So if we look at that ticker symbol team in MarketSmith, it'll actually show you that right here, when the stock was correcting to its 200-day moving average, it was the largest volume since its stage 1 base all the way back here. That's significant. That's telling you that institutional investors are getting long this name, and it's proven because look at the December 2020 quarter. 914 mutual funds were in this name. In the March 2021 quarter, 943 mutual funds are in the name, right? So this is something that you want to look for. You want to look for growing earnings. You want to look for the return on equity. And on a technical analysis standpoint, you want to see that every time a stock corrects to its 200-day, you see a huge snapback on over 100% or more average daily volume. Like it happened here during the coronavirus pandemic, and it happened again here too. I expect Atlassian to breach all-time highs and be a $300 stock by the end of summer. Let's take a look at Ethereum, and we will call it a day. In my previous videos, guys, if you look back on my channel, I've been a crypto bull. I said this dip should be bought. The bullish case for Ethereum, there's a ton of interesting things in the NFT space, in the DeFi space. So I think Ethereum is a buy. If the Federal Reserve is going to continue their shenanigans and printing money into oblivion, this is probably a pretty good inflation hedge. So take the other side of the trade of a dying dollar. And if you just look at this, right, Ethereum's all-time high back in the January of 2018 bull run was just about 1,400. We're only not even 100% past the breakout point, right? So we're only up about 89%. I say only. We're only up about 89% since that breakout point, since its all-time high. For comparison, let's look at Bitcoin. Since Bitcoin's all-time high of 20,000 back in December 2017 going into 2018, Bitcoin is now up from its all-time high 230%. That's its breakout target. Ethereum's going to follow the same trajectory. It's just going to follow the same trajectory at a minimum. So a 200% increase from here. Ethereum's going to be $4,000. Ethereum is going to 4,000. I may say that overconfidently. Look, I don't know anything. I'm just a tech salesman, but I do tend to pay attention to financial markets quite a bit, and I can only share my opinion. And I think Ethereum's going higher. I'm bullish on cryptocurrencies. That sort of concludes it for today's video, guys, and I will see you in the next one. Have a good week.